Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here again this week with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Robb, back for the second week in a row. What happened here?
Back to back. That's a good thing. I know Howard did an incredible job the one week, but back to back weeks, getting back into the swing of things, ready to finish off the year, fourth quarter, rolling into it over these next couple months. So glad to be back. Glad to be back in the saddle, Gary. How are you doing?
All right. It was a quiet weekend. I actually spent all of it working on a new idea. And I spent most of the weekend building a model and I managed to cook and feed myself. So that turned out well.
Yeah, my wife was gone last week, and I took for granted certain things, right? Like, yes, feeding myself and figuring out if I have the dog on my own, how to keep the dog alive as well at the same time. So it was an interesting week for me, but I made it through.
Yeah, over the weekend I made grilled salmon with mango salsa over
Wow.
rice. And I did a really good marinade for a steak that I put on the grill last night. I marinated it for I think 28 hours
Wow.
and it came out great.
Wow. That sounds like an awesome weekend. But yeah, we're glad to be back into the swing of things. This week's issue of the five things is called the We Warned You About Rebound Inflation Edition. Jeez,
This
Gary
is
and
why we
team.
need a marketing person to write the titles. You don't get the finance guy to write the
Yeah,
catchy titles.
yeah. We're gonna have to get that one a little shortened up for next week, but that's all right.
Rob,
We're
if
talking.
only we had a marketing person to help with these things.
I am now the editor in chief as well. You know how that goes. So,
There you go.
anyways, this week we're talking Fed, Chinese government. Liz Warren makes an appearance. We also answer a reader's question. So again, with the fifth thing, we're trying to get more of investor knowledge, research. Gary, some advice from your past for our listeners and readers out there. Gary, ready to dive in on a new week of returning inflation?
Hey, I'm well fed. Let's go.
Gary, thing number one. We're talking about Fed cuts. We saw the core CPI rise. Increased energy cuts are on the way. And then are we going to talk about, I'm sure we are, that DKI said the Fed cut the rates too soon. Gary, you know we are. Yes, we're going to say it. We're probably going to say it over and over again. Thing number one, Gary, 1 month after Fed cuts, core CPI rises.
So, look, Rob, you bring up the key issue at the beginning, which is are we going to be petty and say, I told you so? And the answer is yes. Yes, we are. We are going to be petty. So we got the September CPI, that is the consumer price index. It is what the metric that people typically talk about when they talk about inflation. When people say inflation is up 3%, they're typically talking about the CPI. So the September CPI was 2.4%. That was right around last month's 2.5% and above expectations of 2.3. The core CPI, which excludes food and energy, was up 3.3%. The reason that matters is because it was above last month's 3.2%. So it rose. Now, what we warned about was that the Fed that we're making the Arthur Burns mistake when they cut by 50 basis points last month. Arthur Burns was the chairman of the Federal Reserve back in the 1960s and 70s. He let off of let up on the Fed funds rate too early. Inflation was coming down, but they didn't have it fully under control. He cut the rate under threat from then President Lyndon Johnson, and we got the roaring inflation back from the late 1970s. This is exactly what the Fed has done here. They cut too early, and listen, did did the did the CPI rise, immediately because the Fed cut the Fed funds rate? No, it doesn't happen that fast. But the point is, they didn't have it under control.
Gary, we've been talking to and recognizing weakness in the productivity of the private economy. We've also talked over and over again about excessive government stimulus and spending. Seems like these have led to the misleading GDP reports and the additional inflation that we're seeing here now.
You've got it, Rob. All of those things are happening. So, for people who aren't following the macro news on a daily basis, what's happening is the government is spending far too much. It's spraying trillions of dollars of stimulus into the economy. And because of that, nothing the Fed does really matters. We're all focused on the Federal Reserve, but the thing that we need to bring down inflation is actually for Congress to spend less. So, for the last 3 years, basically, the Fed has been raising interest rates or held interest rates stable for the prior year. And the idea was that by doing that, they would bring inflation down. Well, great, but Congress has been overspending. And that trillions of dollars of stimulus every year has kept inflation high. It's also pushing out the productive real economy, right? So more of the economy is being controlled by the government, which is wasteful in its spending. And small businesses are really suffering right now. And so, this is really a congressional problem. Everybody's looking at the Fed, they're looking in the wrong place.
Gary, moving to thing number two, because I think they are aligned, or I know they are when we're talking Fed cut. The Fed cut was supposed to lower interest rates. Why, Gary, are we seeing the prices of treasuries falling? That brings me to thing number two. The Fed cut and interest rates are rising. You give it a question mark and an exclamation
Yeah.
after thing number two.
Yeah. So let's talk about two key things here for people who aren't so familiar with bond math. The price of a bond and the yield of a bond are inverse to each other. As the price goes down, the yield goes up. If people are paying more, you have a lower yield. And what happened was the Fed cut the Fed funds rate last month by 50 basis points. That's 0.5%. The market celebrated, got all excited, said, oh, great, we're going to have a lower cost of borrowing. And what happened was over the last few weeks, the yield on the 10-year Treasury rose by 44 basis points. That's almost 0.5%. The yield on the 30-year Treasury security rose by 42 basis points, so 0.42%. So basically, the Fed cut rates and interest rates at the long end of the curve went up.
Gary, so it seems like, or my question would be, why were the people celebrating the coming, you call it lower cost of capital, celebrating it in the wrong way? Is that what we're saying?
Yeah. So basically, the people who said, hey, this is terrific, we're going to get a lower cost of capital, a lower cost of borrowing, they were wrong. Interest rates on everything that was longer dated than 1 year got more expensive, went up, right? So what happened, right? Why we should have lower rates throughout the yield curve. Instead, everything out past 1 year, um, the yields went up on that. So that's the opposite direction. So there are two key things here. One, people have a misperception that the Federal Reserve sets interest rates for the whole economy. They do not. The Federal Reserve sets the overnight rate. That's it. The bond market sets the rates for the rest of the curve. So, yields came down for the overnight rate and for 1 month and 2 months, but for everything a year and beyond, from 1 year to 30 years, you got higher yields. And the reason for that is because the market correctly looked at this and said, wait a minute, the Fed is cutting rates. We're going to have more inflation. More inflation means that the value of the payments you're going to get for these longer dated securities are worth less. And so the price of those longer dated securities came down, raising the yield. It was the opposite of what so many people expected. But the truth is, the bond market was correct. Lower rates by the Fed, too much spending by Congress means we're going to have more future inflation. You should prepare your portfolio for that. If you don't, if you're not prepared for more inflation, reach out to Deep Knowledge Investing. We're great at helping people deal with that. But this is effectively what's happened here. Again, Congress needs to cut spending. It's not going to happen. Neither political party is doing that. Neither candidate for president is going to cut spending. So be positioned for higher inflation. And, we're here to help. That's basically what happened. But the bond market was right. The pundits were wrong.
Good point, Gary. Just in terms of if you don't know how, just ask us. We're here to help. A couple different ways you can get involved. You can sign up for a free subscription. That'll add you to our free mailing list, and or actually or you could sign up for a premium subscription that'll give you access to all of the current recommendations, new market research, stock picks, and obviously when we are closing out positions within our portfolio. It's $100 a month for the premium subscription. Gary and I are extremely no guarantees, but we think that it's a good investment that you can make as a part of your overall investment portfolio. Gary, anything to add to that?
No, that was great, Rob.
All right, thank you, thank you. Marketing guys got to do something around here, right?
There you go.
Thing number three, Gary, we're going to China. China's government recently provided stimulus. We saw leading equity indexes surge. Then they declined to provide additional stimulus, and as you would guess, markets fell. You're saying it's a good warning for Congress and the Fed here in the States. Thing number three, Gary, we're talking Hang Seng, the Hang Seng whiplash, the roller coaster ride of stimulus fueled markets. Is this a I'm pretty sure this is a troll episode on me with these crazy titles.
Yeah, so I'm gonna come clean on that. Intern Alex wrote that title. I think we need a marketing person, getting eyes on the
Or I
prize.
need speech lessons or something.
Yeah,
Yeah, language.
yeah, we're making it difficult.
Uh,
Anyway, look, Rob, you set it up beautifully. So, let's cut to the end of it. The Chinese government a couple weeks ago added a lot of stimulus and the market rose 20%. And we said, hey, great. By the way, we own Las Vegas Sands. Las Vegas Sands went up roughly 25%, maybe just a little bit less than that over, a couple of weeks on this extra stimulus. People got excited. And then what happened was, the market was expecting more or more clarity, and the Chinese government didn't provide more stimulus, and prices came right back down. And this is the key issue, Rob. When you have a market and an economy that depends on government involvement, you're going to get bad outcomes. And before anybody gets upset about me picking on the Chinese, I'm going to be the first person to say it. We're doing the same thing here. Congress is spending too much. They're controlling too much of the economy. We have a Federal Reserve that's setting the price of interest, which is really the price of risk and time. This is the most important metric in finance, and it's being set by a collection of unelected bureaucrats who have never run a business. That's our Federal Reserve. Sorry, Fed fans, but this is an institution that really just should be shut down. The market can set the rate of interest. The market can set the price of risk and time. But the more the government controls the economy and the market, the worse outcome you get. That's been true in China. We're seeing that here as well. Our solution, we can't influence the Chinese government. Our solution here is return to a free market and end the Fed. The probability of that happening is zero. So again, prepare for more inflation, prepare for ridiculous outcomes. Remember, you can make money in what people consider to be a bad market. There are ways to change your exposure. Just because it's a bad market or a dumb market or the government is doing unwise things doesn't mean you can't make money in it. So we're positioned for that.
Gary, outside of ending the Fed, as I know you're a proponent of, like, what are things that just the average layman could be looking at that would help to solve these problems, knowing that the Fed is still going to persist?
Uh, so when you're talking about metrics, you mean the kinds of macro things we look at?
Yeah, or is there any leadership within the Fed, right? How closely they're aligned, their decision making to what's happening in the economy? I mean, what confidence, if any, would there be that gets reinstilled to the Fed over the next 2 years, 4 years, whatever the number may be?
Yeah, so none. The issue is everybody at the Federal Reserve and almost everybody in our government, when it comes to economics, they're all Keynesians or MMT people, modern monetary theory. I'm going to shortcut it for people, but basically what that means is they believe that you can print an unlimited amount of money and that you can create value with that. Well, guess what, Rob? Printing digital dollars does not create value. It's stimulus, but it's stimulus that's leading to inflation that is crushing people. And I will remind everybody that what they do is they always tell us we're doing this to help the little guy. We're going to spend money and, help people who, don't have a lot of money. But inflation is a horrible, horrible tax on the poor. It's actually wealthy people who can buy assets and leverage themselves up and have very high credit ratings. Um, they're the ones who will benefit from inflation. They're the ones who benefit from all the currency printing. If you're a poor person, inflation will crush you. It is horrible. It's designed to do that. So the whole system is really designed to make more people dependent on the government. So, the question you're asking me, Rob, is will an organization voluntarily reduce its own power, its own control, its own ability to have more people dependent on it? Organizations don't do that. And the US government is, maybe the largest organization in the world. It's not going to do that. So, don't expect anything positive. Though, the one thing I would have loved to have seen, I've talked about this before, is a number of years ago, President Trump nominated Judy Shelton to be on the Federal Reserve. And Judy Shelton is a woman who is known for favoring less spending and hard money. She's more in the Austrian school, would love to have a gold backed dollar, which I would as well. And, Congress refused to confirm her. And that was a mistake. I think there should be room in that room at the Federal Reserve for somebody who's a hard money enthusiast. And the point is, they don't have a variety of opinions there. They all went to the same school of economic mismanagement.
Thing number four, Gary, we're bringing Liz Warren into the five things. She's a member of the Senate Committee on Banking. She was complaining about the laundering that's seen in the Bitcoin market. And then lo and behold, we see TD gets caught committing $670 million worth of money laundering over a decade. Thing number four, Gary, TD launders drug money. Elizabeth Warren wants to regulate Bitcoin. I think if you ever need an ironic headline, you just got to look at the government.
It is incredible. So first of all, let's talk about the scope of the fraud that went on at TD. It's a large bank, and they're money laundering for drug cartels. $670 million over a decade. There was an article in the Wall Street Journal that made it crystal clear that bank tellers and bank managers went to management and they said, we've got a problem. These are not legitimate transactions. And the bank said, yeah, but we're making money from it. And they didn't shut it down. When they finally got caught, they agreed to pay a $3 billion fine. And Elizabeth Warren, who is a member of the Senate Committee on Banking, her comment, this was on Twitter or X now, $3 billion seems like a lot, but to big banks like TD, it's just the cost of doing business. This settlement lets bank executives off the hook for allowing TD to be used as a criminal slush fund. The Justice Department must do better in enforcing anti-money laundering laws. And guess what? I agree with her. She's right, but this is within her purview. She's on the Senate Committee on Banking. Why are they not doing a better job enforcing this or checking anti-money money laundering laws instead of worrying about whether any of us has a $600 Venmo transaction, which is now reportable? Why not the 600 million of drug money that's being laundered through banks over a decade? Right there. I mean, they're focused on the wrong thing. Again, they're letting the big banks get away with hundreds of millions of dollars of fraud. But Rob, if I send you $600 on Venmo, that's reportable to the government.
Yeah, it's crazy. And it seems like every single time we talk about these scenarios, right, it's always how to squeeze from the little guy, right? Squeeze more and more and more and more. And I think, Gary, that's your point, is that if you're not understanding or just not even understanding, right, have the direction to be able to navigate these markets, it's going to be very difficult, right? And it's going to feel like you're constantly coming up against the man and losing. And so I think that's the key, what we talk about and how we try and position our members as DKI premium subscribers to be able to navigate these markets, know where to find those places in the market that we can still make money regardless of the hand that's being dealt to us by the government, which they're always going to know what hand it is they're dealing.
Yeah, and Liz Warren in particular, she's horrible for this. The way she won her office was by saying she was going to regulate the banks and help the little guy. Well, we're reporting $600 Venmo transactions and she's cracking down on Bitcoin. But in the meantime, $670 million of money laundering for drug cartels. That's the thing she's supposed to regulate. She's
Mhm.
supposed to regulate the big banks. And by the way, she's been one of the leading voices in Washington against Bitcoin. But Rob, let's talk about this for a second. The market cap of Bitcoin is $1.2 trillion. Now, Liz Warren is saying, hey, there's fraud in Bitcoin. It's used for criminal activity. And the answer is, yeah, it is in small amounts. Some small fraction of Bitcoin activity does pay for criminal enterprises. So it's some small fraction of $1.2 trillion. In the meantime, the government just found $670 million of money laundering fraud in the dollar. Hey, Liz, if you can't manage the area that is your responsibility, which is the dollar, which is government spending, which is our banks, right? If she can't manage that, why is she trying to regulate Bitcoin, which is out of her purview? She should have nothing to do with Bitcoin. And if you want to take on more responsibility, maybe show that you can do the job you were hired to do effectively before trying to do 10 other things. She's not effective in her job, but is trying to regulate Bitcoin and say, hey, there's crime in Bitcoin. Guess what, lady? There's crime in the dollar. Once you get that under control, then we'll be interested in your view on Bitcoin. And by the way, one other thing, I promise you, Rob, there's more than $670 million of government fraud going on right now. So what do you think? And here's a question for our viewers here. What government program do you think is wasting, stealing, or laundering money? Put it in the comments. We're looking forward to some creative responses to that.
Put it in the comments. And Liz Warren, you have an open, warm seat ready and waiting for you any moment you would like to join the DKI 5 things and chat about these, or at least answer maybe some questions from our members.
You know what? That would be fantastic. And I've been critical of her consistently because she's bad at her job. But you know what? You're right. If she wants to come on and defend her positions and make her points and go through her talking points, that's true. We'll have her on, and I would love to hear what she has to say on why she thinks having hundreds of millions or billions of dollars of fraud in the government and in the banks that she's supposed to regulate is somehow not as big a problem as the tiny bit of fraud in the $1.2 trillion Bitcoin market. Like, you're right. Let's have her on. Let's hear what she has to say. I'd be happy to listen to her.
And remember, thanks for everyone listening. Really would encourage you to consider subscribing for a premium subscription. It's $100 a month, as we mentioned earlier in the show. Allows Gary and I and the rest of the team to continue to put out this good type of content. At the end of the day, where DKI is successful is in its picks and performance. But this small nominal amount from a subscription standpoint allows us to continue to produce these segments, the written 5 things, additional research pieces at higher volume. So please consider, if you would, becoming a premium subscriber today. To close out this week's We Warned You About Rebound Inflation edition of the 5 things, or we could have just called it the tongue twister edition, would have been a little easier.
Rob,
Again,
I got to tell you, I was this close to making it the We Told You So edition.
yeah, again.
Yeah.
We told you again. Thing number 5, Gary, as we've mentioned, want to start to have conversations just around investing. Know a lot of people my age, right, feel a lot of times confused. It can be scared, daunting if you're not spending a lot of time on this stuff. Money is obviously always very personal, right? And people react and use it in different ways, or feel comfortable, right, in navigating these markets. So thing number 5, Gary, we're actually answering a reader's question, which I think is amazing. How should, Gary, a young person who wants to save and invest do that if they're not in the portfolio management business, or if they're not an investment professional?
So, Rob, it's a great question, and it's one that I'm really excited to talk about. The first place to start is to realize that there are certain professions where, because of the work you do, you can help yourself. If you are a doctor, you don't necessarily need to go to the emergency room if you know the problem you have isn't that serious. You can do some self-diagnosis. If you're a nutritionist or a chef, you'll be able to eat well yourself. If you're an auto mechanic, you don't have to pay somebody else to fix your car. So there are certain fields where there are advantages. You can take advantage of your own services. One of the advantages of being in finance is I manage my own money. I don't need to trust somebody else with it. I don't need to farm that out. And that's a huge advantage, but it's also a full-time job. So, we got this great question from a young person saying, hey, wait a minute. I'm right at the beginning of my career. I'm not, going to be a hedge fund manager, a portfolio manager. What do I do? How do I
Hmm.
do this? Right. And I think it's a great question. And the reason it's a key issue is because, when I was a kid, they told you, just save your money and put it in the bank and, you'd save in dollars. But given the debasement of currency, you can't save in fiat. You can't save in US dollars. You can't save in British pounds. You can't save in euros. The value of these, the purchasing power of these currencies go down every year. So the first place that we would start is spend less than you make, right? Because listen, it's really fun to have, a fast car or fancy vacations or private air travel or, bottle service at a club. Like these are things that are a lot of fun, but if you want to save and invest first, you have to save. So a key point is just spend less than what you make. Now, let's talk about the kinds of things that you can do long term um, to help invest in this kind of environment. And what we're looking for are things that you can invest in long term that you don't need to be checking the news every day. You don't need to be managing them on a daily basis. You don't have to be checking, daily reports. So here are the places I would start. I would start with positions in Bitcoin and gold. They are great hedges against currencies that are being devalued over time. I like energy. Energy demand will only grow over time. Oil and uranium are great places to have money. In fact, Rob, just today, there was an announcement that Google has joined Amazon and Microsoft as tech companies that are buying power from nuclear power plants to power their AI data centers. You tell me, do you think that's going to grow or shrink over time?
Yeah, yeah, definitely grow. And Gary, I think too, DKI, if I'm remembering correctly as well, we have a subscription specifically for students. So anybody that may be listening that is a student, we have discounted rates for premium subscriptions for you to get going in the market. And then Gary, to close it out, yeah, what are if you don't mind, some other areas where you think it would be good for basic or at least new investors, right, to take a look initially for themselves.
So I think one of the things that people can do, especially if you're just starting out long term, just buy market index funds. The fees are really low. SPY, QQQ, that's the S&P 500, the NASDAQ 100. You know, could you have drawdowns? Yeah, but if you're going to be investing over the next 30, 40, 50 years, those, those markets tend to do really well over time. You can do that. And then, if you want to do some individual investing, go get help. You're not going to be able to
Yeah.
do it yourself. You're competing against people who are
Yeah.
professional investors. And that's the kind of thing, that's the kind of thing we do. And you're right. The reason we offer students a discount is because we want to see them have the opportunity to get really good
Yeah.
professional advice and get started young. And we price those um subscriptions right around the price for Netflix because every student has that. And
Right.
my thinking is, if it's something you want, if it's something that matters to you, if your financial future matters to you, it has to matter at least as much as, watching the next season of White Lotus.
Yeah, I think you brought up a good point for me as well, Gary, especially since knowing you, right? Is just, yeah, you're going out into a market with investment professionals that are spending all day on these things, right? Where a lot of individuals don't have the time necessary, right? Or it just feels like you're getting into that game where it's just dart throw, right? But what has helped me in talking with you, consuming, reading DKI content is at least to start to see different things that I wasn't seeing before, right? So whether that's on a macro level in terms of how things are changing and shifting, that obviously presents new opportunities for or places for me to look like if it is individual stocks. And then I think with your recommendations as well, hey, I at least have some backing and some knowledge and some understanding and time that you've put in to then help me work my way through my own research and understanding of the position to make sure I'm fully confident and if it aligns with the way I think And obviously, as you go on, you get better and better and better at it. It's practice, right? And you need to spend the time and put the effort in. So I know that's been a big takeaway for me. And then also just in general too is, you're talking about it, but just to call it out specifically, is that budgeting, right? Understanding, okay, where that money is going, where it's going to be. I know as a business owner myself, right, cash flow is always one of those pieces, right? To make sure you're not leaving stuff in places where it's just wasting, right? Or you're not using whatever particular service you might sign up for. And I think until you kind of lay those things out, put pen to paper, you'll wonder, how do I find a couple extra $100 a month to invest? It's probably out there, right? But I think until you kind of sit down and take these things seriously and get a good understanding of, what your financial picture looks like, might be harder to identify those opportunities or feel like you don't have the ability to invest in these opportunities.
And you know what, Rob? Asking for help is a totally fine thing to do. There's nothing wrong with it, and it's probably better than buying GameStop and putting all your money into that. Fingers crossed, right? Like
Right.
instead of buying meme stocks, go get some help and figure out what you can do that'll make sense for the long term.
100%. Gary, thanks so much. Another great addition. Really like these questions that we're bringing to the table. If you have any questions that you want to ask, and maybe Gary, it might even make sense, throw that up on the website, even a Ask Gary section where we might be able to just capture people, just a thought idea, the marketing guy, right, on the fly. So we'll have to note that one down. But either which way, you can reach out ir@deepknowledgeinvesting.com. That'll be a great inbox for you to use to submit some questions in the meantime. And this week's edition, again, the We Warned You About Rebound Inflation edition. Now I'm just trying to get better at it, and I think
Yeah,
I nailed it right
you
there.
got it. You got it.
This week's edition of the 5 Things. Thanks so much again for tuning in. As always, sign up for a free subscription if you can. Take the time just to do that as appreciation. Like, comment, ask us a question, tell us we're good, tell us we're bad, thumbs down. Really, any feedback is worthwhile. Gary, any closing thoughts for this week's version of the 5 Things?
No, Rob, I really appreciate what you had to say. Great, having you still in the host chair again. And for everyone who's watching this again, thanks so much. We really appreciate, we know your time is valuable. Happy to have you here. And if anybody knows Elizabeth Warren, see if she wants to be on the next version of the 5 Things, because that'll be a fun conversation. Other than that, have a great week. We'll see all of you guys next week.
Thanks, everyone.